With less than 12 months to go for the Bitcoin halvening, is this time going to be different? Are we going to see the same sort of patterns, or is the cycle broken and we should expect something different because of what's going on in the macro economy? If you're a regular viewer of the channel, you might have some thoughts about where I'm going with this. However, I've got some other data that I want to present with you today. In particular, a lot of time analysis. Some of this stuff blew my mind when I was researching it for today's video. So don't go anywhere, hit that like and subscribe button. This, of course, is your home of macro cycle analysis across Bitcoin, the stock markets, commodities, and real estate, the biggest cycle of them all. First things first, I want to have a look at the 4-year cycle, where we're at, where we're up to, where could we go, and basically look at how this has been playing out and what I think might be happening in the next 1 to 2 months. And then, of course, where does this all end? An approximate time target for where this entire bull market cycle ends, and then potentially we drop into a pretty significant bear market and potentially not reach a new all-time high for several years. It possibly won't meet another all-time high after this next all-time high, at least for a considerable period of time. This is basically the premise of the 4-year cycle. We're looking at low to low. That's what a 4-year cycle is for BTC. This is Hurst cycles. So if you wanted to do a little bit more research to understand it, because it will apply to all markets around the world, understanding Hurst cycles, by all means, go ahead, check it out. The idea is that cycles repeat and there are cycles within cycles. So that's why it caught my attention when I first heard about Hurst cycles, to understand a 4-year cycle, because it all fits in to larger cycles like your 20-year cycle timeframes, then going to the 60 years, 120 years, all that sort of thing. That's why the cycles will always repeat. I've got a couple of notes to point out as well about cycles before we get into some of the deep data here. Now with cycles, the 4-year cycle itself is not the halvening cycle. That's not what we're talking about in today's video. The 4-year cycle is not defined by the parabola as well, so the parabolic move into the tops like we've seen in the past. Many were expecting to get another parabolic move in 2021, but it kind of didn't happen into that final peak. We got it first up, and I'll go through that when we look at timeframes as well, because that will help us anticipate what we could expect with the market in the next, say, couple of weeks to potentially couple of months as well, where we sit and where we go in terms of price. Now, in terms of cycles overall, cycles don't shorten and they don't lengthen. They're approximates. Like you can see here for BTC, the first move was about 37 months, and then the move to the downside was about 14 months. Then we had 35 months, so it's slightly shorter, but it's still within that same time period. And then we had a 12-month move to the downside, a 35-month move to the upside, and now a 12-month move. So those two were exactly the same, but the previous cycle was slightly longer. So it doesn't mean that they're always going to shorten, because the next one could be slightly longer, which is why I've got a target of about 35 to 39 months, but it just comes, we got to follow the market as it comes. So we're not trying to say that it has to be an exact number. Cycles are the market's heartbeat. That's why they always repeat. You could possibly say they rhyme, because it's not an exact time every single time, but it's an approximate time, and it always happens. They're time targets. So cycles are basically time targets, and time is the most important. Like I've got here, it's more important than price. Many ask, what is the price going to be at the end of the year? What is the price going to be at the peak? What is the price going? No one knows. That's the main thing. So no one knows what the price is going to be. The main thing that we can forecast is time, and that has happened over the course of history. It is pretty clear that it is possible to do that, but not many can do it quite accurately, consistently over, I guess, a longer period of time. And so I'm pretty happy to be here on YouTube so that I've got a backlog of history as to how I've been calling each of these turns in the market. So we've got some sort of record here as well. And many have done this before with newsletters and other ways of presenting it to the public, just like Gann and Wyckoff did back in the early 1900s as well. Price generally makes headlines when there's a new price record or there's pain in the air. And I'll explain what that means, because that's really important to understand when it comes to these cycles, because many miss out on the moves and then they aren't here for the time when you need to be here, and exactly why. So first up, we've got those cycles. We've gone through each of those. We're on the move here in terms of the new bull market, and basically this price has been going up for about 8 months. And what I'm going to do is look at how long this has been contained within the previous price range, and then how long does it take for the market to actually break out of those price ranges. So first I want to have a look back at how long it takes for each of these moves to happen. Looking at what's happened before and why I think these levels are going to continue to get a little bit higher until we see a bit of a pump move. These moves in particular, they last for a couple of months. So what I'm talking about here is basically the significant move in the market, and then the price consolidates again. So we had a couple of big months up, and then the price consolidates here. 1, 2, 3, 4, 5, and then it breaks out again for a couple of months, and then consolidates again for 1, 2, 3, 4, finally breaks out again. It goes on a run for the last 4 months here, but breaks out of the all-time high for only 2 months, and then consolidates again. 1, 2, 3, 4, 5, 6 months, 1 month out, and then you've got a collapse from that point there. So in each of the bull or bear markets, you can see that, more importantly in terms of the bull market, you can see that the price consolidates, and then we have these 2 months out to the upside. So right there's your 2 months, and then the price is contained within the same price range as one of those months, basically the most previous, the month that led to that peak, essentially. Not always, but basically to that point there. So I'm going to bring out some of these rectangles so you can see what I'm talking about. You can see there's that entire month's price range that we just saw, and then 1, 2, 3, 4, 5, it finally breaks out on the 6th. So the price was contained within there for 5 months, breaks out on the 6th. So that leads me to these points here. The price generally makes headlines when there's a new price record or there's pain in the air. Well, pain's pretty easy. Market goes down, it goes down by significant amounts. Here's 30% down, or 36%, or this final move here, 32% in that month. Of course, that makes headlines. It never makes headlines when it's contained within the previous price range. And that is the time that the masses miss out. That's the time when most people are bored of the market and they just leave. It makes headlines when it starts to break out again. And so they're the times that we want to have already been already invested, or we want to be getting in early at that point, because there's only a short period of time where the headlines are made. It's as long as the media can keep the attention of the people, or the people have attention to stay with with Bitcoin or something like that, right? They don't have much attention when it comes to their money, when it comes to investing. You can see it clearly on the chart. 1, 2, 3, 4, 5, and then the breakout on the 6th. And then it only happens towards the peak where everyone's involved. They come in at the end, rinse and repeat. They get flushed out each of the times. And then by that stage, the show's over. They think they made a ton of money, but they really didn't, for the risk that they had in the markets, and they lose everything. So looking here at this cycle, you can see we had one big breakout bar, and then the market was contained basically within that price range for 1.5, almost 2 months. We got the close above it, and then we went again. So you had one big push. The market's contained within the price range here. Yes, there's a slight move above, but of course the market came back down, washed out most of those people who were buying up towards the peak of that. They get flushed out, and we try again. Then we go into this last move of 3 months. Most of those get flushed out, and the game is over from that point. So same sort of deal again. Here is that final move up. We had 1, 2, 3 moves to the upside after that consolidation from the low, and then the market was sideways, basically sideways, until October of 2020, which was about 16 months. Yes, it did spike down, and it spiked down again on the pandemic low. That's typical. You have an extreme event, you're going to spike down from that point, but the market didn't stay under there very long. Most who were here at that time understand that it was a very negative time, and most people did not buy at that point. And of course, the market stays within this price zone. News headlines start coming around again in November of 2020 and December 2020, and then the breakout. But by that stage, a lot of the gains were made through these lows because people are buying up at the low when it's typically less risky because the price is lower and it's putting in higher lows. The lower points are less risky, the higher points are more risky. When you're waiting to see because of economic data, yada, yada, it just becomes more and more risky because the price is higher from any of the lower points. That's typical of markets. Same sort of thing here. You've got 1, 2 price bars, what I'm looking at when it comes to the peak here, 1, 2, and then basically the price was contained for about 13 months. There it is, all the way to April, and then it breaks down in May, so that 14th month there. So it's contained for about 13 months. Now this gets to the interesting point. If you've been paying attention here, these last couple of moves, price was contained within 1 or 2 price range bars for, in this case, 16 months, and at the peak was about 13 months. Now, we're about to, maybe we don't this month, I know many are still hoping and waiting for breakdowns of 25K and 19.5K, which I've gone on record saying that that is the higher low in March. Bitcoin is not going to be breaking 19.5K, and 15.5K is the cycle low now. So I can't see these two breaking. But what gets really interesting now is that price has been contained within this one bar of June 2022 for now 13 bars. For 13 months, we've been contained in the same price range. Bar, yes, there's a few weeks here where we had the November collapse of FTX, but then look at the green month here of January where the market just burst back into this price range, which is telling you this is way undervalued and the market bought it up very quickly, the smart money. It's telling you that right there because we did not go lower on one of the biggest news events here, right? Which was then the banking collapse of March. So we've been in here for 13 months. 13 months at the top, we broke out of that price range. 16 months in this consolidation period, we then finally broke out of that price range. I'm not saying that we're going to go to new all-time highs or anything like that, but we're getting towards a period where price typically doesn't last within these price ranges for that much longer. And we could be on the verge of breaking out of this zone, so breaking out of $32,000, maybe this month, which gives us another couple of weeks, few weeks, or maybe in August. And I know this also goes against a few of the theories that we've already seen 1, 2, 3, 4, 5 green months in 2023. We've seen 5 green months since the low. We've seen 2 red months. So it's pretty heavily weighted on the green side here, where we would expect the market to have some sort of pullback or at least a slowdown and a grind like what happened in the previous cycle. So this also goes back to the title, whereas maybe the 4-year cycle isn't working out as others have expected. But as I've pointed out, my 4-year cycle, based on Hurst theory here, which we look at lows to lows and we have multiple cycles coming together, which is what these semicircles are. You can see as many of them come together, they give you a stronger time frame for a low, which is why we have this low. Then we could say that, well, we might not get this particular move where we have all of these red bars on the way down because we didn't see huge pump in terms of the percentage move before all of these red days to the downside. We did see some good green months to the upside. We saw 100% so far from the low to the high, but on each of those moves, we've had some pretty solid moves to the downside, which has balanced out the market. And that's exactly what we want to see for a healthy bull market and a healthy start to the market. So like I'm saying, there is no definitive answer here, but some of these things are pointing to a possible break of this $32,000 level. And if we were to break, then of course we have some other key resistance levels, as I pointed out before, somewhere around the halfway point from the high. So the highest 69,000, divide that by 2, you got 34,500. Then you have some of these lows here sitting in the high 30s. And then we have another 50% level at 42,000. So the low to the high, and you can see that's at 42K. And then you have those monthly peaks at around 48K. So that is going to be a critical level for Bitcoin as well. Now, there's a huge one there. You're going to have selling. What's going to happen is, of course, all these bulls that got in late are going to be selling at each of these points on the way up to get out. They're 38s, they're 34 or 35s, they're 42Ks, and they're 48Ks. There are a lot of people that bought back here and then got destroyed. So that's why this area is going to be potentially a bit of a slow grind. We might pump quickly to about, I don't know, mid 30s to get out of this zone, because we've been in this zone for a long time based on history, basically the zone of this price range. And when we do, this would also break a Wyckoff top. So I've talked about these sort of tops before, and that was how I was able to call May not going to 80K when most were hoping for a Bitcoin 80K. So that was May of 2021, based on this same theory where we have what's kind of like a gotcha bar where most are waiting for it, but it's a change in trend. That was the same sort of thing there. So I'll talk about that in future videos. But once we do break past that, then that's just another nail in the coffin of the bears. And I've given you my reasons why I think this particular price zone only has limited time left in it. So there's an expiry date, because what we've seen in the past with other particular price zones, and you can take this all the way back, you can do it on different time frames as well, just looking at those ranges. Yeah, basically you can see on each of these occasions, now I'm not looking for another 13 month, but you can see the 1 month here. Once it lasts within that for a period of time, it's ready to break out. The market has absorbed all of the supply that it needs to absorb from that point. Short period of time, there is a move, and then that's the late bulls buying again, and then it wipes them out, absorb all the supply again, and then you get that next breakout. So this is very typical of a bull market, which is why we're seeing this stair-stepping process to the upside. So hopefully that is relatively clear when it comes to the 4-year cycle. It looks like everything is still on track for our 4-year. We've got reasons as to why the market could break out to the upside, and that might only happen for a short period, and then we get a pullback like that. So then we get a nice solid red month, because we really haven't seen any solid red months in this entire move to the upside. And this also leads us into the crypto fear and greed index, because we really haven't had a very significant pullback in the market sentiment either. But not to make the video go too long, I've talked about fear and greed in other videos, and I said I'll do another one more focused on just the fear and greed. But I wanted to give an update on my thoughts on the 4-year cycle, looking at the low to low, because we have a top coming in, as I said at the beginning, coming in somewhere in late 2025 or early 2026. Now I've just thrown any price range on here at the end because I don't care about the price range. Everyone's focused on the price. The important thing to focus on is time, and approximately when is this market going to end? When is this bull market going to end? Whatever price it gives us, we take it. We then do our measurements from that top point, wherever that might be. Who knows? Is it going to be 90? Is it going to be 120? Is it going to be 150? I don't know. I'm not trying to make claim to that. If it is around that point, and then you start to see the market pull back like it's done in the past, then you just have to get out. There is no guarantees on whatever price this thing gets to. The only closest guarantee is price, because the cycles always repeat. When, if you want, you can call them that they rhyme, because we get them at rough intervals every single time in history. So that leads us out. If we look at around 35, we'll do the shorter end of the cycles here. So from the cycle low to 35 months, that's at October 2025, which is still just over 2 years away from now, July. And if we look to the longer end, say 37, that brings us to December of 2025. So basically Q4 of 2025. And I'm just putting an extra couple of months on here in case we get a slightly longer one this time, because we've had 2 shorter bear markets of 12 months. Then 39 months brings us somewhere out to February of 2026, maybe January or February, just as a rough guide here, because we still have our 18.6 year cycle, which is in play. And I know I'm throwing a few things here, but the idea is that we have cycles within cycles. The 18.6 isn't dead on 18.6. It's between 17 and 23 years, with an average of approximately 18 and a half years. So this is the real estate and economic cycle, the overarching cycle of all of our markets around the world, all of our Western developed markets. And we're looking like we're going into a peak somewhere around that 2026-ish era, which also lines up with some sort of high in Bitcoin at about that time as well, which could spur this on just that little bit more, which is why I've pointed out here, maybe we've got 39 months to the upside. So we're still kind of early days. If we do get, this is going to be the biggest thing for the short term for all of us here that are in BTC. If we do get this break out of this zone, 13 months contained within the same price of, your 17s to 32s, that is going to pull a lot of late money in, and then we get that pullback, all right? Similar to what we've seen happen in the past. Look at that, the late one, and then the pullback. That was just dead. No one's listening. Everyone's sort of sick of it because they got screwed at the top of such a massive bar at that point. You can go back in history again, same sort of deal, that big pump, and they kind of get screwed at that point. Another big pump, they definitely get screwed at that point because market goes all the way back down, and then the consolidation again. So they're my reasons why what I think is happening in the short term within this 4-year cycle. You've got my targets for the longer term aspect in terms of where we might end in time for the end of this cycle. And let me know in the comment section what your thoughts are. Do you think this thing is going to change? Do you think we're going to have a big push all the way to the halvening, which is May of 2024? It's a long way away to get all the way into that point there. Or do you think it's going to be something similar to the past where we only had a big push early on and then it was basically all the way down for a very long period of time? That's my 4-year cycle update. I'm going to have more of these on the channel, so stick around, like and subscribe. Link in the top of the video description for our free crypto and economic report. You guys know the deal. Thanks again for all of your support and your subscriptions. I'll see you at the next video, hopefully providing you with more of the macro cycle analysis that that you've come to love and know on the channel. There are my words for today. I'll see you at the next one. Till then, take care and peace out.